All right, well, thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you here on a Monday. We're watching what's going on in your ag commodity trade. We're off and rolling with the futures trade on the grain and the livestock segment. The grain markets could be kind of interesting today because we're waiting on USDA to release their new crop progress and condition report that will come out this afternoon. Now, that report will be coming out at 3 p.m. That will be Central Time, of course, today, and then that's 4 p.m. Eastern. And then we also will be getting our export inspections numbers as well in about 15 minutes from right now. So we're looking forward to that as well. Lots of stuff going on today. And as a matter of fact, not only that, but we're also going to be getting the cold storage report today. That'll come out at 2 p.m. Central Time. And that, of course, will have an impact on the livestock trade, and that could be a double-barrel impact because of the cattle and feed report that came out last Friday. So there's a lot going on today, and things will start happening from USDA reports in about 15 minutes, as I mentioned, with the export inspections report. I'll dig those numbers up when they come out in our next segment. I want to take a look at what's going on in the corn market here in the early going today. We had seen a little bit of a firmer tone. The weather has really cooperated with a lot of planting activity in the plains, but most analysts that I've been talking with say that they should pretty much be wrapping up with the corn planting wherever it has been able to go. We're getting kind of late in the growing season, and they are looking for maybe a few acres to be switched over to soybeans as well. Right now, July corn is trading 3.5 higher, right at $3.98 per bushel. December up 3.25, and now it's back up there at $4.03 per bushel. So we're above $4 in the soybean trade today. We have had weakness in the early going. Nearby July down 8.25 at 10.66, although that is 8 cents off of its earlier low. November now 14.75 lower. A lot of pressure there at 10.34 per bushel. OliverSloup joins us from the floor of the CME group there in Chicago. And Oliver, as we look at the opening grain trade here, kind of a mixed bag when it comes to the corn and soybean trade here, going opposite directions this morning. Your analysis this morning.
Yeah, a mixed bag is exactly right. And as you had mentioned, we're starting to price in some of these potential for acreage switch. If some of these corn acres move over to beans, that's obviously going to put some support in that corn market and put pressure on soybeans. And that's exactly what we're seeing here in the early morning trade. Obviously, a lot of trade left today and throughout the week. We do have crop progress out after the close. They're expecting corn to be about 85% complete, soybeans about 60% complete. But really, there's a couple technical levels that we need to hold for this corn market. Ultimately, I like corn on a longer-term basis. 385 to 386.25 for that July contract is pretty good support, and I think presents a great buying opportunity. You have the 20, 200-day moving average, as well as some Fibonacci retracement levels. We've pressed towards that psychologically important $4 handle this morning. If we're able to get a close above that, I think we go retest the recent highs about 407.25. And if we see a close above that, I think you see a bigger leg here in the near future.
Really? Okay. So I was talking about this last week that I believe it was on Thursday or midweek last week. We had that big sell-off in the grain markets, and we were talking openly about the fact that maybe they were actually flushing out some of the weak longs in the market at that point to maybe stabilize the market and kind of reset things a little bit so that if we did have a weather rally develop later on, it would be good to go. Do you think that did happen, or do you think there's more to do there?
I think that's exactly what happened. I believe that sell-off was on Thursday, and that was, following a 4 or 5 day run higher. So I think that was a lot of profit taking, a much welcomed pullback or consolidation lower, and presented a great buying opportunity because we did hold those support levels that I'd mentioned that we were looking at here this morning, same as last week, 385 to 386 area. That's going to be key going forward. We do know that funds took some positions off last week, about 43,000. They're still net long about 14,000 to 15,000 contracts. So it'll be interesting to see if they start to put some of this back on with the weather concerns.
All right. What about the wheat trade? It's kind of mixed here this morning. On the Chicago wheat, we're down 3/4 at 467. Kansas City wheat on July at a little bit ago, it was trading about 2 cents higher here at 451. So it is now about 6.5 cents off of its earlier low. The Minneapolis spring wheat trade is now trading a half lower at 527.25. The harvest is getting underway in Texas, I understand, Oliver, but yet Kansas City is firming up. Why would that be?
Well, I like wheat on a longer-term basis. The chart isn't the prettiest. There's a lot of other, nice setups out there. But as far as risk-reward goes, it's very well defined. For the July wheat contract here in Chicago, 455 is good trend line support. We got towards that 460 level, started to see some buying activity step in. And I think if we get towards that 455 to 460 level again, you have an opportunity to look for some value to the upside, because the risk is going to be defined by the contract low, which is only about 6 cents below that, about 449.25. So I think there's more risk to the upside than there is to the downside, and it's very well defined with that.
Interesting. Okay, with harvest impending, that's a very interesting scenario. A quick look at our cotton market before we get into the break. On July cotton here this morning, here we are currently down 10 points now on July at 61.48 cents per pound. Early in the early going, it was up 1 point, but now we're down actually 19 now on July. So we'll watch that closely as well. We're talking with OliverSloup. We'll be back getting his thoughts on the livestock trade this morning, and it's kind of wild and woolly. We'll be back in just a little bit. Well, thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, and I'm joined now by our guest analyst for this segment. It's OliverSloup with iiTrader. He is speaking to us live and direct from the trading floor at the CME Group in Chicago. Oliver, a lot of the trade was just absolutely shocked when the USDA came out with that cattle on feed report Friday afternoon after the markets closed up. And, of course, that came out at 2 p.m. Central Time, and it showed a placements number way above the expectations. They were looking for something under 100% at 98.6, and we came out at 107%. That really caught a lot of people off guard. Analysts this morning that I spoke with, Oliver, had said that, well, we had sold off for a better part of a couple of weeks and drifted lower in the cattle market. They thought that would take some of the sting out of the trade. But if we look at our futures right now, we'll go to the live cattle board and see what the current prices are. We did touch limit down on several contracts. Right now, the August live cattle are down 255 on the day at 114.90 per hundredweight, and that did touch limit down at one point. October down 245 now at 114.65. It also touched limit down earlier today. On the feeder cattle side, we'll flip over there. The August contract down 424 in value. It's showing a price of 143.68. That is another month that had touched the limit down at one point this morning. September down 390 at 142.12. And this is getting to be a hairy market here. What's going on with this?
Well, as you had mentioned, the cattle on feed report is definitely putting a lot of pressure on the market. But if there is any silver lining for the bulls, it's going to be the fact that we're not lock limit down after such a bearish report. You talked about kind of the futures price drifting lower going into that report, and I think that's kind of giving a little bit of hope here, because with that blowout number and the placements, you would kind of expect us to be lock limit, but we're not. And I do think that is a silver lining in this market. There are some key levels that we're looking at for the live cattle contract. 118 definitely needs to hold on a closing basis in that June contract. If we break below that, I think we go to contract lows at 113.90. But however, I think there's going to be some good buying opportunity at that level where you start to see some shorts cover and some new buyers step in looking for value.
Well, of course, later on today after the close, we get the cold storage report. So traders are going to have to be on the ball.
Definitely on the ball. They're going to be, they've been all over the place here this morning. They're going to continue. Obviously, a lot of trading left in this afternoon's trade going into that. So expect the volatility to continue with that cold storage report here later this afternoon, and really probably through the remainder of the week as traders look to square things up and reposition after these numbers.
Okay, a quick look at our lean hog trade here today. We had an early start that was pretty weak. And we still show the June lean hogs currently trading 75 lower at 79.10 per hundredweight. That July contract is down $1 even now at 79.25 per hundred. August down 78. Technically, this market seems like it's floundering, kind of in trouble here, doesn't it? Because it lost that $80 support.
Yeah, the $80 was a key level that we were looking at on the way up. That was key resistance. It was support. Now it's going to become resistance again. The bulls definitely want to see a close above that to encourage more buyers into this market. 200-day moving average should act as first decent support. That's about 78.86. So that needs to hold on a closing basis. A failure to do so could lead to some accelerated selling pressure here in the very near term, because as you had mentioned, the chart and the technicals don't look too pretty to the upside right now. So that 200 200-day moving average is going to be one to keep a close eye on.
Boy, very good advice. All right, thanks, Oliver. Appreciate that, staying on top of everything there. So OliverSloup with iiTrader in Chicago with expert analysis on what's going on in the grain and livestock markets.
All right, well, thanks
Exciting
again.
day today.
Yeah, very much so. Big start to the week.